Yeah, so it looks like I've been talking to you guys. I've been talking to you guys, and you didn't hear anything because the computer didn't actually switch me to the correct menu. However, it's not a problem because we can repeat everything I just said, and I think that most of the things I just said have been pretty much easy to understand. So let me just guide you once again of what we've done here when we've been using the auto chart list. So the auto chart list, as you can see, can be found here on the panel of the on the right hand side. So what do we have here is the panel showing us depth of the market. We will talk about later trading trading central, and auto chart list, of course, kind of symbol info and stuff like this. However, today we talk about the auto chart list, and our first market that we analyzed, as you can see, was the euro dollar. Of course, it was the euro dollar. There you go. The euro dollar is here, and what we found here was the two different patterns, right? So on the time interval of M30 and M15, we got the pattern called channel down and falling wedge. As you can see, those patterns are to the downside, right? So let's click on one of them, and we got the explanation here. The explanation is that it says that on the euro dollar, we have identified the channel down pattern on the 30-day moving, 50 minutes time frame. That was identified at 7:30. The pattern is 56 candles long. The longer the pattern, it usually the better. However, it's not the rule. The direction is to the downside. So what do we want to see is the downside continuation on this pattern. The quality of this pattern is 5 out of 10 bars. The initial trend is 5 of the 10 bars. Uniformity is 2 out of 10 bars, and clarity of the pattern is pretty impressive, 7 out of 10 bars. What is actually what is this telling you in plain language is to open the trade. This is the short trade, which means you will be selling euro dollar. You can click here and you of course open the chart. You can click here and you have a quick trade. So the quantity you inputted here will be traded by the by your straight on the market. All of the things you need to know are already on this pop-up here: pip value, trade value, commission required, and margin available. So you are perfectly eligible to open this trade. So if you click, as you can see, you will open this trade. Let me just take a look. This is M30 on the euro dollar. Let me just get rid of the previous chart. There you go. So what do we have here? Apparently, let me zoom in. Put the full mode. Let me just zoom in, and you will see what do we have here. We have entered the trade to the downside, so we are short, and the take profit was set at the low of this candle. The stop loss was set at just above the high of this local candle. So we are trading to the downside. We are trading to the downside because of the because of this the quality of this pattern that's been identified by the auto chartist. So the trend change, as you can see, is the direction is down, but the trend change is reversal. What it means is that this local move to the upside might be reversed to the downside, and the target usually for this kind of a pattern is at the lower channel line. So if you want, you can of course help yourself by drawing this kind of a lines on the chart, and then you will be able to see what is what is going on more precisely. So you can adjust your take profit, or you can adjust your stop loss levels. So basically, you take this trend line a tool, and that's the first trend line, and that's the second trend line. Let's say that this is something like maybe, oh, there you go, something like this. It's not a quite of the parallel channel. It's nothing like this. However, it's visible straight on that this channel is to the downside, almost parallel. So it looks very very nice, and to the downside, it looks very nice for the bears, of course. So what you can do right now is, if the market will go to your direction, you can move your take profit level towards the lower channel line, right? So that's, of course, might be a little bit intuitive, because you never know where is the exact level to the pip, where is the exact level when the market will hit this lower line. However, there's a very high probability that you can, of course, find out more likely where is the target level for this trade. However, for now, let me just, this is educational purposes only, so I will keep my take profit around the local low. So this is how you basically identify the channel down pattern, how you trade this kind of a pattern, basically showed to you by the Autochartist, which is a very, very cool feature on the cTrader. So right now, I'm going to show you another pattern identified on the, I think it was the British pound. There you go. This is the British pound. And as you can see, there's a completely different time interval. There is a 4-hour time interval. If you click on see more, you can have all of the characteristics of this pattern, directions to the downside. The pattern is a triangle made of 41 candles on the 4-hour time frame. Quality is 5 out of 10, and this pattern was identified at 6 o'clock in the morning. So the quality of this trade might not be that good as that the patterns identified a little bit later, right? So however, the interval is completely different. The interval is 4 hours. So what it says, it basically is that you can stick with this trade for a little bit longer than, for example, day trader. You can even keep this trade like the swing traders do, right? Because it's a 4-hour interval. So that's pretty much, it's still intraday trade, okay? So it's below the daily time frame. However, this kind of a pattern might be extended a little bit longer than the regular patterns identified by the Autochartist. So what do we have here is, of course, the continuation pattern of the triangle to the downside. So basically what it says is that there is a possible breakout to the downside of the 4-hour chart. Oh no, don't use this. Click here and open the chart, and there you go. You got the 4-hour chart open. There you go. There is a possible triangle somewhere here, right? So what do we need is a trend line again. So the triangle pattern, let's say, looks like this. If you know what I'm talking about, that's even better. So that might be like a triangle pattern. And what it tells you here in the Autochartist, that there is going to be a breakout to the downside. Breakout probability is very, very big. 7 out of the 10. So the breakout to the downside is the way you want to trade this pattern. So of course you click sell. As you can see, we are already trading this pattern. One lot here of sell entered at 1.1816. So a little bit, there you go. It's like a 3 pips from the current price. And that's another pattern identified by the Autochartist. Is everything okay? Let me just check if everything is okay right now. There you go, no questions. So let's go back to the Autochartist. Let's switch to another market, and the last market we would like to switch to was the precious metal market, which was of course gold. That's the gold market, and as you can see, we got channel down pattern identified on the 30 minutes time frame, as you can see here. And this is it needs a little bit more explanation here, because I want to show you how you can actually trade this kind of a pattern. So let me just remove all of this pending order. So what I'm going to do is the order, I will click here and remove this order, just to show you guys once again how you can be much more clever using this kind of a tool like Autochartist. Basically, what it tells you right now is that there is a channel down pattern to the upside, identified like let's say right now it's like 20 minutes ago. So what do you want to do if you like this, the characteristics of this pattern? You of course want to trade it to the upside, right? So you need to buy, of course. Now this pattern is made of 53 candles, directions to the upside. So what we are missing is this little move to the upside towards the upper channel line. So that's the basic of the technical analysis. Okay, the quality of this pattern is very, very good, 7 out of 10. Initial trend is of course very, very strong, is 9 out of 10, and an uniformity is 10 out of 10. Clarity is 6 out of 10. Very, very nice looking pattern. It looks like a high quality pattern for trading, right? So we've opened the buy position already. If we switch to the 30 minutes, because this is the time frame this pattern was identified, 15 and 30 minutes. The 30 minutes looks even better. So once again, this is a channel pattern. So what we want to do again is we don't have to do it. However, it will be always nicer to visualize this kind of a trade. There you go. This is your channel. It's not a parallel channel in 100%, because the parallel would be something like this, and if you want to move it might be something like that. Okay, that's the 30 minutes pattern. Okay, so we entered it already. What is our target? Target made of the first take profit is located at 1,755, somewhere around this upper line here. This is the target for the for this trade, and of course the stop loss is placed just below this swing here. This tick to the this move to the downside here, and this is what it tells you here in the chart. Is you should trade to the upside, because there is missing last bit of this channel. So the trend change should be continuation of the trend that has been made here already. Very good quality. The initial trend was very nice, very strong, and the clarity of this trade is very good. However, there is one more thing here that I would like to show you, that shows you how to clever use this kind of Autochartist. So what you do, you switch to the 4-hour chart. Let's say, let's switch to the 4-hour chart. There you are. 4-hour chart is here, and as you can see, as indicated by this window here, Autochartist window, the initial trend is very strong, 9 out of the 10. Okay, so this shows you, of course, that in the background there is a very, very strong breakout to the outside. If you zoom out, maybe let me just move it. There you go. If you zoom out, you can clearly see that this is a very, very strong breakout from this lows here at 1,620, right? Very nice, impulsive, strong breakout to the outside. So the initial trend is very strong, right? So you might be tempted to trade something else here, something more, maybe not something else, but something more that gives you a little bit more little bit more to gain, little bit better result. Okay, so what do I mean is that if you have this strong signal here, no, I don't want to do this. Let me just fix my line. There you go. The line should be target pips. There you go. What you want to do is to place your horizontal line at the swing high, and then you want to place a stop limit order. I will tell you why. Because if you place stop limit order, you want buy stop limit order when you break out of the channel. So you want to trade channel breakout. So the breakout of the channel will be above 1,758. You can take a look at the screen and say, yeah, it might be around 1,758. You want to limit the range of the for 20 pips, right? You remember this from our webinar regarding the market orders, and of course a stop loss and the take profit is being placed below the swing low, and the take profit is 1,786, somewhere here at the swing high. And then this is of course the pending order. So if you place it, you have the confirmation window, and as you can see, your order is waiting for a breakout out of this channel. Okay, the breakout out of this channel to the upside, where to the swing high. So the first signal you are trading right now is the signal that goes to the upper channel line, and then it should reverse and continue the correction, for example. But in the case of a sudden breakout from the channel because of the initial trend, let's say indication is 9 out of 10, so it's a very strong initial trend in the background, you want to be in this trade to the upside, right? So you place buy stop limit order with a 10 pips limit at the level of 1,758, and you place stop loss here below the low, and you want to trade towards 1,787. So this is another cool thing that you can use if you have a basic knowledge about the technical analysis, if you have a basic knowledge about the chart patterns. Of course, there are different chart patterns that just channel down, channel up, then the triangle, the wedge, the falling wedge, the rising wedge. There's of course a double bottom, there's a triple bottom, double triple high, double high. There is I don't know, head and shoulders and stuff like this. All of these patterns are being identified in any of the technical analysis book you can find anywhere. Somewhere over the internet, in the library, and in the facilities like this. So get yourself familiar with this kind of a chart patterns, because they are very, very often used by this Autochartist. And if you have a little bit more knowledge about how to use them, how to incorporate them to your trading strategy, you can not only use the direct indications made from the Autochartist, you can always go a little bit further than this and trade another possibilities of this market. For example, in our case, this is a potential breakout to the upside above 1,758 if this market ever will break, of course, and go towards 1,787. This is the swing high. So please notice this kind of indication as well possible for the Autochartist, not only what it shows you here. But that's a little bit, this is like a step further, this is like a step up from the beginner level, because as I said, you need to be much more educated, you need to have some knowledge and utilize a little bit more of your trading and your strategy. Of course, there is a probability that the Autochartist will show you a breakout chart pattern when the breakout is done, right? For example, above the level of, I don't know, maybe it will be even 1,758, but above the upper channel line, because this is a classical, typical rule for the technical analysis and the textbook example of how to trade a breakout to the upside of the, let's say, in our situation of the channel down pattern. Are there any questions for now? I hope this is that everything has been explained very nicely. So are there any questions right now? Let me just take a look. Do you guys have any questions right now? Anything more? I think I explained this feature quite cool. And in any details, let me just switch here to see if there are any other patterns. Maybe we will find some more patterns, more interesting patterns. Bitcoin, not necessary for our chart, no patterns. What else do we have? Euro dollar, we already found. Maybe euro to the British pound, maybe a pattern here. We have a pattern here? No, but maybe there's a pattern on silver. Let me take a look if there is any pattern on silver. Metals is, there you go. Any pattern here? Oh, of course. Oh, this is very nice. This is very nice, and it changes the situation, because as you can see, you got plenty of the channels. Of the patterns here. Look, you got on 15 minutes. Triangle pattern to the downside. You got on 15 minutes channel up in the same time to the upside. You got on 60 minutes, 1 hour time frame. You got falling wedge to the downside, and then you have a falling wedge to the upside. And of course, you might be wondering, hey, which one of these signals is actually a correct one? Which one should I trade? Which one should I choose then? Or what you have to do is to research a little bit more. So let me just take a look at the one on the very bottom. And the first thing I see is that this pattern, falling wedge pattern, was identified, as you can see, on a 1 hour time frame. However, it was 4 o'clock p.m. Right now it's around 9 p.m. So it's been 5 hours ago. Okay, so it's a very clear signal. So what you have to do is to trade to the upside towards this zone here, like between 21,000. 21,980 and 21,416. So this is the zone for this pattern. However, let me just open this chart, because $21 and yes, $21.49. Okay, $21.09, $21.41. Okay, that's everything. There's no comma here, so I thought like, oh, very very strange price for the ounce of the silver. Nevertheless, it looks like this is a continuation pattern to the upside, identified at 4 p.m. Now, it all, as I said before, it all depends on what kind of a trader you are. If you are a scalper, if you are a day trader, if you are intraday trader, if you are swing trader or long-term trader, you will take this pattern or not, basically. But the fresher the pattern is, it's not a rule, but it's usually better pattern, because this is 5 hours old, and it might be already played out. So let's take a look. What is going on here? 1 hour chart of the silver. What do we have here is breakout to the upside, right? Falling wedge. So we should see continuation of a breakout to the upside. Basically, we got this. This is the wedge. Let me just show you guys where is the wedge. trend line. So what I think what they want to identify is this is the upper line and this is the downline. So kind of a wedge, kind of a champagne, like a battle here. You see, this is kind of a wedge. I'm not going to explain it to you because you need to have this knowledge if you want to trade the chart patterns. So let me just zoom out. There you go. Yes, it can be identified as a falling wedge. So we expect a breakout to the upside, and this breakout to the upside has happened, and this is still a nice, good quality pattern. Very, very clear to be traded. 21.20 something. So there is still an opportunity to trade to the upside, right? So nice pattern. It still looks valid despite the fact that it was published, identified 5 hours ago. But on the 1 hour time frame, we got the conflicting pattern, which is a falling wedge to the downside. As you can see, inside of this pattern, there is one more subwave to the downside missing if this level here is violated. So this pattern was identified at 7 p.m. So it was only 2 hours ago. Very clear pattern. And it means that we are waiting for the reversal inside of the falling wedge. However, now take a look at this. How you eliminate the pattern that has a low probability of being profitable trade. So that was basically that was the level you should trade. Okay, that was the level you should trade to the downside. Okay, as it was on the picture. So let me just show you. This is the horizontal line. There you go. That was the level. But the market broken above the upper wedge line. So this, there you go. This pattern is already kind of not really tradable, right? That much. So which one you should choose? Because you have two patterns, two directions. You should choose this one. Why? Because we have a breakout out of the upper wedge, falling wedge line, and we expect the up move higher, right? So especially on the 1 hour time frame, you can leave this trade for the whole day, basically, right? You can leave it for one trading session, like a London session, and you can even extend this trade towards the New York session. However, this is still intraday signal, intraday chart, intraday potential setup. Okay. On the lower time frames, of course, if you are, for example, scalper and you want to trade this signal on a 15 minutes, take a look at the quality of the signal. Very nice. Quality is 6 out of 10. Initial trend is not that strong. Look at this, just 1 bar. However, the clarity of this pattern is very, very strong, 9 out of 10. So what do we want to see here on the 15-minute chart? Or let me just, it was this one, I guess. What do you want to see this? What do you want to see here is basically very nice move for a scalper from 20.78, right? From 20.78 towards around 20. This is 68. So it's a 10 pips move. All right, on a 15 minutes time frame. So let's switch to the 15 minutes time frame. This is 15 minutes time frame. This pattern was identified just about 10 minutes ago, so not that bad. And what do we want to see is a down move. So the possible triangle. Let me just show it to you. This is the possible triangle as identified by the Autochartist. So it's something like this. This is what they want us to trade. There you go. So what we need to do is to enter around 20.78 towards 20.68. So that's a 10 pip scalp. So let's say we want to take this trade, okay, just for educational purposes only. So we what we do this. The current price is 20.81, not too bad. I would like to trade it. Only 3 pips away. There you go. And the take profit, of course, I will switch. Let me just move the take profit line towards the 20.68 exactly. So it's around this lower channel. Sorry, this is triangle, lower triangle line, as you can see, and the stop loss, let me just place it somewhere here. So there's pretty good risk to reward ratio. However, please notice this is a typical intraday setup, typical intraday pattern. I would even say this is a scalper's pattern for to trade, right? So as we can see, Autochartist can find you plenty of the chart patterns to trade for scalpers, for day traders, for intraday traders, for long-term traders, swing traders. It doesn't matter what traders you are, what trader you are, you can still find plenty of profitable, interesting patterns on the Autochartist, using the Autochartist. So this should be something, using the Autochartist apparently should be something you should consider incorporating into your trading strategy, maybe just maybe together with, for example, the trading central that we talked about in our last meeting. So let me just find some trading central signals from the last meeting. There you market hours, trading central, there you go, euro dollar, and as you can see, we got some trading central setups here as well. So using Trading Central and using Autochartist can save you plenty of time for your analysis and for your research. However, it's always good to do your own research, to do your own analysis. Nevertheless, if you are using the Trading Central or not, right? Of course, it's up to you if you want to resign completely from using your own research and analysis and rely only on Trading Central or Autochartist, because as you can see, those kind of cool features of the cTrader provide plenty of the trading opportunities for all of the kind of traders, as I said many times, scalpers, intraday traders, long-term traders. It doesn't matter who you are, you will find something interesting for you, either in Trading Central or in Autochartist. So let me just take a look if there are any questions here. Maybe there are, maybe not, I don't know. I can't see if there are any questions for now. So you guys have like a, I don't know, maybe 1 minute to ask me something. If you like, if there is no need to answer, then there is no need to question. Then of course we will be finishing this meeting slowly. So I hopefully explained the Autochartist pretty decent way, and I think we are going to continue to show you guys the opportunities inside the cTrader. We talk about the Trading Central, we talk about Autochartist, and of course I would like to talk a little bit more about the other cool features, like for example depth of the market, because there is a depth of the market here, and how to use it in your trading. So that might be the topic of our next meeting. Hopefully it will be made next Monday, same time like today. So because there is no questions here, thank you very much for your meeting. Thank you very much for participating in this webinar, and I hope I will see you guys next time. So take care and bye bye.